Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current. Welcome, everybody, to Digital Currents. Mark, I looked at the stats, and this is our 76th episode, which means we've banked 75, and this will be our last one for the year, so it's a little bit sad, but I'm just already even more enthusiastic to do 75 more. Mark, how are you feeling?
I know. I doing great, and it's exciting. I hard to believe we've done 75 of these. Seems like just yesterday we started. I appreciate that you are wearing the orange today because we're recording a day early because I need to go up there for the Indiana State Championship game tomorrow. So, but I did wear some socks, and actually I'll take the blame. So it's tougher to do. So I got black sock game on. Maybe that's appropriate too. But I got the Bitcoin roller coaster, and I guess the black socks. It's a black day where we're back to price levels X.
Yeah,
haven't seen since last week, but clearly we're back to levels that we're at a week before Thanksgiving.
right.
We wiped out a month's worth of gains. Well, yeah, but what we're doing is we're in this accumulative pattern. We're making higher highs and higher lows, and people forget the market. Any market, whether it's Bitcoin or other coins or stocks or bonds, they don't go linearly.
Right.
They go in waves and have, positives and negatives. And so as long as we don't, really have a downturn of the roller coaster sub 95, we'll keep in this accumulation pattern of higher highs and higher lows.
Right.
And ultimately, I think what people are forgetting is yesterday, yesterday being Wednesday, we're recording this on Thursday instead of normal Friday. Powell spoke, and he did and said everything that was expected. I'm going to cut interest rates by 25 basis points. Inflation's a little hotter than we thought. The economy's growing a little hotter than we thought. Everything's kind of okay, but we have to be cautious on how many more rate cuts we're going to have. And then he said something that when you actually watch the video of what he said, isn't what everyone's freaking out about. Someone asked, well, what do you think about the Bitcoin Strategic Reserve?
Right.
They said, well, by law, we cannot own Bitcoin, and meaning we, the Fed, and we are not looking for law changes. So he didn't answer the question, what he thinks about it. And no one should have thought ever that the Federal Reserve, which is neither federal nor has any reserves, not a bank, would have been involved. That would have sat at the Treasury, which is where the gold sits. The Fed doesn't own the gold. The Fed is simply a think tank of a bunch of PhDs that set interest rates, control the price of money. They're not a bank. So everyone freaked out about this, and there was no need to. But what's really happening is when the market freaked out and you had stocks down 3, 4, 5, 8, 10, 15%, people got margin called. And when you get a margin call, when you go into a liquidation, when there's an unexpected event, and that unexpected event was there was a dissenter. So normally when the Fed raises or lowers rates, it's unanimous, right? Because they won't do it unless it's unanimous. And it's rare, but it does happen occasionally. There's a dissenter, or even two or three. But there was a dissenter, and we hadn't had one of those for a long time. And so people are reading too much into that. And so, stocks sold off. But when you get a margin call, Like if you borrowed money to buy stocks, which today in the stock market, we have the lowest level of cash ever. In fact, we have negative cash, meaning that the average fund doesn't have any cash and they've actually borrowed a little bit to buy more. They're on margin. And margin debt can get called. And so it gets called. Well, if your stock's down 15%, you can't sell that to pay back the loan. So you got to sell something that's not down. Cash, gold, Bitcoin. So those things all tank in these periods of flash crashes. Everybody says, see, I told you, they're totally correlated with the market. Like, well, no, everything in a liquidation is correlated. So now the liquidation's over and stocks are up again today and everything's fine. The world is fine. But now Bitcoin is crunching because people are reading too much into the Fed chair saying, well, we can't own Bitcoin. That doesn't change the fact that the president has said he's going to do an executive order. Now, whether that works or not, I don't know. Congress has a bill that Lummis is going to put in front of them. And that bill, unlike the bill that we've been agonizing over for the last 2 days, that Elon and Vivek are like, are you kidding me? 1,500 pages the night before with all kinds of stuff that has nothing to do with spending, which is the way the government has always worked, by the way. That's what pork barrel projects are all about. But anyway, so that's a lot of rambling on nothing, but excited that, this is our last episode of the year. Lots to kind of reminisce about and talk about, and excited to get rocking and rolling again next year.
Yeah, absolutely. We just want to thank all the listeners for making this possible. We've tried to put into effect a lot of listener feedback, so please continue sending it our way, where we have been really investing in this. And so kind of looking forward to next year. You're going to see increased engagement, more guests. We're going to be rolling out short form clips, which will kind of have the greatest, flavors of individual episodes. We've already started doing this. And, potentially even other engagements and kind of lifestyle formats into the future. And also as we kind of look to see, part of what's been going on now, a lot of sort of news on the AI front recently, Mark, before we do a walk back in 24, you wouldn't kind of expect anything less than probably the last big headline in AI is another all-time high, right? Databricks. They achieved a $62 billion valuation with another record, the $10 billion VC funding round. And there was a name here, Mark, that before I kind of get into the tech stuff, as I get prone to do, on the investment side, some of the big wigs are here, A16Z and a couple others. But one that was a little bit of a different name that you may not have noticed, Mark, but maybe you have, is the Ontario Teachers Fund. Was one of the investors into this round, which I thought was pretty interesting because when we look at pension funds, obviously in Canada, there are a couple, they tend to be a little bit more consolidated than here in the US. But I think this is kind of showing again that AI is here to stay. Also, AI is nothing new, even though it is a definite trend and buzzword of 2024. I think AI might have been the real winner of 2024. But, Databricks is an AI company. They're looking to IPO. Everybody's pouring money into this thing. Mark, I'm sure you saw this. What are your thoughts on such a huge mark?
Look, it's the arch rival of my son's former company, Snowflake.
Right.
And, he, quote unquote, air quotes, retired from Snowflake, a few months ago after enjoying, that business. And Databricks is a viable competitor. And now what's interesting to me is neither one of those companies, if you asked them 5 years ago, 4 years ago, 3 years ago, 2 years ago, 6 months ago, would have said they were AI companies.
Right.
Never would have talked about it. But now they, along with a couple others, Datadog and a few others, again, that wouldn't have said it was let's say it was a data company, are all the foundational AI companies. And the logic is, well, we have all the data, right? So what do Databricks and Snowflake and these other companies do? Well, they manage corporate data and they make it accessible when you need it. So in other words, if you think about a company, you produce all this data and you used to have to store it on-prem and you had to keep it all the time. And like, stuff in your file cabinet, once you put it in the cabinet, 85% of it you never touch again. And about 54% of corporate data is dark, like literally never gets touched. So they're like, well, if you're paying all that money to keep the data live, well, why not give it to us and we'll keep it. And when you need to work on it, then you just pay for that. And we get the economies of scale and then some bright PR person, almost as bright as the Google PR person on this Willow thing, which I'm sure we'll talk about at some point. But how you can make something out of nothing. So these are database, data lake, data storage, data accessibility, whatever you want to call them. They're data companies. But now, because we own the data, we can train the models better than anybody else. So we're an AI company. So boom. I mean, there were a whole bunch of people short Snowflake and it was crashing. I mean, and then they used the AI term. And you and I joked, or I've joked about this. You didn't joke. It's a dumb joke, but I do it all the time. Is the perfect quarterly earnings call is AI. AI. Just AI. We love AI. AI is good. AI is great. And we're going to do a lot of AI. So that's what they did. And their stock went like this, squeezed the shorts. Databricks has convinced all these big investors, we're an AI company. Or maybe the investors convinced them that they're an AI company. So I think the problem, in my mind, is with all of these companies, the valuation doesn't match the reality of the revenues and the earnings. And that's as simple as it is. Because I heard someone the other day talking about NVIDIA. They're like, well, 26 times is pretty reasonable. Like, dude, you're not talking about 26 times earnings. You're talking about 26 times revenue. There is no planet in the solar system where 26 times revenues is normal or can even be good. So, but it was just funny. I mean, he had internalized it. And what you need in these kind of markets where everyone's all in, there's no cash on the sidelines, there's no buyers left. What you need is the little kid who says, that dude's naked. Why is he walking down the street naked? Right? The emperor has no clothes. And I think that day's coming, and maybe it's already here. We had, I think, 10 days in a row of down Dow. It's only happened once since 1974. And in 1974, it happened because we were coming off the Nifty 50. Right? The Nifty 50 were the glamour stocks of yore, Polaroid and Xerox and IBM. And imagine Polaroid being a fancy growth company. But, now it's extinct.
Yeah, I mean, to that point, Mark, I think that there is some promise here that this time might be different. So I know the
4 most expensive words in the English language. This time it's...
Yes, and it is this time may be different. I think this is also something that I haven't seen before, Mark, where there is some promise of revenues to come, which we live in the world of promises, aka venture capital. So we see that there's increased momentum and accelerated growth, 60% year over year for these guys to satisfy this kind of AI demand. And look, I mean, they're basically trying to eclipse 3 billion in revenue. And so that to me is a pretty big number. But the kind of real excitement here, I think, is when you look at who's investing in this deal, Mark. So obviously you have the VC firms, but this kind of speaks to our trend that we've now gone beyond and participated in a new asset class. When you have Ontario teachers participate as well, GIC was an investor in this as well. So this is kind of maybe a little bit tangential into the sovereign AI investors, because you have two sovereigns invested into this. And I'm sure that I got to fact check this, so I don't want to say this too confidently, but I would not be surprised if there was some sort of a data relationship between some of the investors and the company itself, because now you're dealing with lots of records, government entities, and, employees that kind of are sitting in the middle and trying to extract value. But it reminds me of, as this is a big sort of bellwether for the venture ecosystem, right? We had what in some ways can be described as a little bit of an accordion year, right? Where you had some compression and then you had a little bit of an expansion on the valuations, but that was mostly with AI. And so when we saw some of the biggest deals, this one was by far the biggest, but then you have the other ones in AI as well, right? So we had our OpenAI kind of rocket to, at the time, was an unthinkable amount of money and a raise. And then XAI, which I thought was a pretty astounding one. Again, you start seeing sovereign AI investments because you're seeing, now governments participate in this deal. We saw QIA, our friends over there, Qatar, invest into Elon's a company here. We've said that maybe this is also a proxy into favorability at the White House, given who's kind of backing this deal. But, the numbers cannot be misstated here, that the market on venture starting 2024, Mark, was pretty bleak. We were at a moment where it was tough to have conversations with founders because they still were in this mindset of the record 2022 years, wanting, 20x multiples on forward-looking revenues. That's kind of gone away. But then you also had the kind of fear with some investors thinking, venture is not an investable asset class. And that kind of goes against everything we've been taught about, when we should be buying versus selling. And really, if we kind of take a step and look back in this year, we found that there were just some really incredible milestones, right? So obviously, we spoke about some of these big ones, but just going all the way back, Mark, in January, it's hard to think about this. We had a time where we saw the first ETF approvals, right? And so that happened, not even a year ago, but it has now led to, hundreds, plural, billion in investment into this type of vehicle, which helped real people. I would just caught lunch with a buddy of mine, former guy that we go back from the Verizon days, and his savings account is Bitcoin, right? And specifically into the ETF. And he said, "What do you think about that?" I said, "I think you're better than 90% of saving strategies given that approach." He's like, "Well, what do you think about sort of the long-term outlook here?" I said, "Well, there's different ways to participate in the Bitcoin ecosystem, but as a regular retail investor, that provides a nice safe haven, right?" And then we kind of looked to see what happened after that. Bitcoin was the tide that lifted all boats. We saw Solana start to increase, and then Ethereum got to a point where it also released its own ETF, but not before that Denkun upgrade. So that's the real big difference in Ethereum versus Bitcoin. Is Bitcoin is never changing, right? It's sort of like the grumpy uncle at Thanksgiving that will kind of keep steadfast in those beliefs, whereas Ethereum is kind of like the fun young aunt, right? And it'll kind of come and go with some of the
fashion trends. They'll try it.
Exactly.
Ultimately, that grumpy uncle will grudgingly make a couple changes. I mean, Signet is an example. So if somebody really does innovate, the developers can say, thumbs up 51%, we're going to add that. And that's why Bitcoin's never going to be MySpace, right? You're never going to have a Facebook attack where, you just get rid of the incumbent, because we're not in a closed source world, right? MySpace couldn't see Facebook's code, so they didn't know how to react. Well, today, if there's something better that comes along, open source, you can just read the code and incorporate what's good. So that's not going to happen.
Yeah.
What is going to happen is this continued accumulation of the most valuable computing platform on the planet, right? That's what Bitcoin is, because it protects you against the devaluation of currency. Now, in the short run, when the Fed is cutting rates, but the rate, right, the 10-year yield actually goes up. So let that one sink in. So short-term rates went down, but the market kind of called bullshit and said, no, we're not going to cut rates because you, government, have so much debt that you have to refinance. It's going to cost you. And in that environment, the dollar actually strengthens. And so all these currencies around the world, whether it's the Korean won or the Brazilian real or, oh God, Japanese yen, because Japan, after Powell last night, the Bank of Japan said, nope, we're not going to raise rates. So I don't care what the Fed does. So the yen, just got monkey hammered. Went from like 154 to 159, like instantaneously. And look, that's great for people like me who are invested in a Japanese company that owns Bitcoin denominated in yen, Metaplanet. That's a great thing because part of the thesis for that company is as great as MicroStrategy is in the US, Metaplanet is that on steroids because the yen is going to continue to weaken. The dollar will probably, kind of bounce around. Eventually it will weaken, but it's going to bounce around more because we still are the world reserve currency. But the yen has no way out. And that's beneficial. It's like if you held Bitcoin in Brazil, you're crushing it because the real is getting slaughtered. If you hold it in Turkey, you're crushing it because the lira is getting slaughtered. So as a saver like your friend, what you want to think about is why should anything that I own increase in value? Well, either it has to get more productive, right? Some businesses actually get more productive, so the equity of those businesses can go up, or it has to be devalued by the base currency. So like real estate, right? Our homes shouldn't actually increase very much, right? They don't get more efficient. They don't grow. They're not an organic living thing. They actually wear out. And someone said, well, but there's more demand because there's limited supply. Well, kind of. You can build more houses. Now, maybe not on your street, on your corner, next to, the fancy restaurant. But at the end of the day, what's happening to your real estate is that your base currency is just devaluing. That's why gold keeps creeping up. And despite how bad an investment gold has been, poor Peter Schiff, particularly compared to Bitcoin, it is a good indicator of monetary debasement, because gold is money, meaning an asset that exists in the absence of a liability, and all the other currencies devalue themselves against it. So all of this comes back to a couple of things are happening in Washington that are really important. So one is, and I don't remember who said it, and I think maybe Pomp was giving me the story that he was talking to somebody about. Somebody said this, that this election really wasn't, even though it wasn't really about the left and the right and Republicans and Democrats. It was about the technologists and the incumbents, right? The haters and, the disruptors. But the incumbents don't want disruptive technology. That pipeline, we don't want a pipeline. We like rail cars. You want this new payment rail that's better, like a stable coin that's way better than Visa and MasterCard. Hell to the no, we don't want that because Visa and MasterCard, those are great. So the Trump victory / Elon victory, whatever you want to call it, and the staffing of the administration with technocrats. A technocrat's a bad term. technologists, actual people who want to have a disruptive future and who want America to win again, right? We have been a winning place for innovation. Now, the only thing I don't like, and again, the XRP people are hating on me for this, but I don't like it, is what Garlinghouse wants to do, and the same thing with the Hedera people. They're trying to lobby their way into getting their tokens made special, American made, so they'd be exempt from tax, and maybe even if we think about a central bank digital currency, maybe we could be the rails for that. I don't want any of that. I really don't. I don't want special deals for special tokens. I don't want people to pay money, pay to play. I like free and fair. So now you can hate on me all you want, but that is what's going on. And I think that's where we are.
Yeah. To that point, Mark, that was most of the big stuff in Q1 was kind of the Bitcoin story. And one of the last things that happened, which was big news at the time, was Sam Bankman-Fried. He gets charged and sentenced to 25 years. If you can believe that happened this year, it's kind of crazy to think back, but it did. Also, an important Q1 headline, which didn't quite make the ABCD cut, was that Michigan won its first national championship since 97. Not a way to sneak it in.
And so
that's right.
The scary thing about that, and it actually ties into North Carolina, is it showed in the past 11 months that the game that you and I love and that many people love, it's gone forever. All right, gone forever.
Oh yeah.
In a post-NIL world, that game where you recruited, like it was about the coach that could get in the living room and convince mom and dad that he was going to take care of their son, and that's gone now. And UNC just hired Belichick, and everyone's like, "Oh, that's ridiculous." And I was even like, "Yeah, I don't really think that's." But when I watched him describe this, say, "Look, that thing that you all love, it's gone."
Right.
The game now is about agents. It's not about mom and dad. It's about agents, and it's about money, and it's about getting to the NFL. So we are an NFL development league. Oh man, okay. And the transfer portal, everybody going everywhere, and everybody leaving, chasing the money. And to get to the NFL, it's about relationships and experience. Huh. Okay. That's a different world.
So as we jump to Q2, Mark, we saw probably the biggest change here was the halving, which we covered almost in real time. I think we had a show pretty much the day of, if not the day before.
No,
on the 20th. And I think for some, the thought is it wasn't as an explosive outcome as we may have hoped, that all of a sudden Bitcoin was going to go to 100K. Some of this was due to market prices already being factored in through the larger passages earlier in the year with the ETF movement, as well as, some other things that were coming later in just a couple of months, when you saw things like Senator Loomis's bill proposed, which was the Bitcoin Act that happened in July. And this kind of set the table for what's to come.
A little more subtle than that. And we did talk about this.
Yeah.
That the ETF approvals pulled forward demand. Mm-hmm. So historically, we regained the all-time high post-halving.
Right.
Not pre-halving. And this time,
double peak
pre-halving. Why did that happen? Well, this time it happened because there was more demand from these ETFs and there wasn't as much supply. But normally what happens is the halving occurs, so your block rewards get cut in half, and the miner that gets the Bitcoin says, well, I can't sell at this low price. I need the price to go up before I sell because I have less coins to sell. But the subtle difference was on the day of the halving, they initiated something called runes.
That's right.
Technology following on ordinals, which basically says, you look at all the blocks that have ever been mined, there's space in some of them. Like literally, I own a on-chain monkey that is inscribed on the original Satoshi, right? That Satoshi Nakamoto mined. I mean, it's just like crazy when you think about it. But there was some block space because there wasn't very many people using it. And so you can go back in time and you can reinscribe information on chain. And what's important about that and what's important about these technologies is if any of us own an asset in a digital form, right? A title, a piece of art, anything, a stock certificate, we probably, if we think about it, don't want it on a chain that's really just a pointer to an AWS server somewhere, and that the actual thing is at a place where a centralized authority could push a button and say, you can't get access. I would prefer it to be literally on the safest, most secure, most decentralized blockchain, which is Bitcoin. Well, in order to inscribe something, you need to pay the miners to validate the blocks. So transaction fees went up. And this has actually been expected. As block rewards go down, the expectation was that transaction fees would eventually go up. And that's how you would compensate the miners to keep mining and securing the chain. And it actually worked so well with this runes that the miners were like, dang, I don't have to sell. And so they were perfect. Everyone was in stasis. And so we didn't have that big jump until kind of the runes settled down. The transaction fees went back down. The miners were like, well, shit, I got to pay the bills. So I better sell. Well, I can't sell at the low price. So I need the higher price. Well, then you got I hate to say the perfect storm because it's like the inverse of that. It's the perfect, sequence of events. You had the Donald show up in Nashville and make all his, wild promises about what was going to happen in Bitcoin. And from that day, we started. And once the election became clear, I mean, the big question, the reason I'm wearing the roller coaster socks today is, what is fair value? Where are we in this cycle, right? We're in crypto fall, right? Which is the third of the 4 seasons. And that means there is winter coming. And, printer is coming, but the printer isn't going to be as big as if the Democrats had won. So that's less good for Bitcoin. Winter is coming. And what is winter? Winter is when we get to the point where the price gets so far above fair value that it naturally then has to adjust. And that's when the bear market selling occurs. And fair value, again, if you look at Tim Peterson's model, is somewhere 80-ish, 85-ish, somewhere in that general vicinity. And so when we blew right through that and got to 6-digit Bitcoin, like, okay. Now the question was, do you go through 150%, the previous 21 and 17, where we went to 2 times fair value, went to 20 on 10 and 60 on 64 on 32. So this time, were we going to go to 160? Didn't know, but as soon as we blew through 100, everybody's making those calls. I'm like, well, okay, but the thing this is different. And sure. I don't mean different like it's going to change everything, but it is different because there's a new participant. There are a whole bunch of participants in the market now that are not directional. They buy the ETF and they short the future. Sometimes they might even short a little more and have a net short position, or maybe there'll be a little less and net long, but they're pretty market neutral. And that constant sell pressure on the future is why we get stuck in these kind of ceilings Because what people forget, if you know you have to buy a bunch of something, you'd rather pay a low price than a high price, right? So what you do is you actually leak a little negative information. You actually short a little bit of what you eventually want to buy. And so,
and as we speak here in real time, we're seeing a momentary correction where we're seeing Solana drop almost 10% down to 190, and Bitcoin now approaching 96,500 and ETH at 3,300. So it's one of those things, Mark, where exactly right. We kind of know that there is this psychological barrier with the 100K, which is probably the big news on the year, needing to kind of break that. And I kind of think about it as, two worlds, the world where we think about Bitcoin in millions and we think about Bitcoin in thousands. And that was kind of a point that we were able to surpass. And it was really, shepherded by a couple things. For the first time, you can actually talk about Bitcoin without necessarily just getting laughed out of the room, whether that was room of congressional lawmakers, or that was an investment room and roundtable, or was just Thanksgiving dinner, where we had a nice seat at the table this year. And of course, if you look at some of the headlines that rounded out on the AI side, you had some news being made by the likes of NVIDIA. We talked about them a lot this year, whether it was hitting 1 trillion for the first time, or 2 trillion for the first time, or 3 trillion for the second time. They did that all in a year, and it really kind of showed that this was really driven by this AI tech craze, which I think, we talk about a world where Bitcoin, crypto, Web3, AI are part of this new fleet of technology that's going to move everything forward. And we're just going to think about inputs as a way to drive a new car, which is our technology. And we're not necessarily going to think about, is this price too much or that price too much as what is the hash rate? What is the number of users on a given time in a network or in a transactional environment? And so we kind of started seeing that shift this year for the first time. And also, Mark, an important story that we just got an update on, our Gilligan's Island in space, the crew that was stuck there, Mark, for many months. So they were supposed to be, these 2 American astronauts were supposed to be there, Mark, for 1 week. They've been there for 9 months. So there was supposed to be a rescue package with SpaceX. Maybe somebody sent the wrong tweet over to Elon. They're going to have to wait there. It's going to be a long Christmas. They're not going to make it back for another month. And so this was a story that we have been kind of watching. We hope in 2025 we can kind of break the news and have these guys come home. But it's really also emblematic, Mark, of this new privatization of space, which is kind of a crazy topic that we didn't get into a lot this year, but there were some elements here. I think AI is also a part of this as you look at kind of the Elon-backed companies. Obviously, SpaceX leverages a lot of what's becoming a very important, AI and chip war industry that we talked about extensively this year. So, as we kind of round things out, we've got about 2 weeks left into the year. And I think, what we'll see is Bitcoin try and kind of figure out what is its new resting phase. No bold predictions here. I think we've already done the hard math of switching from thousands to millions, but people are going to kind of reset a little bit, and they're going to do what might be predicted as what could be one of the largest spending Q4s of all time, where it's not enough, Mark, to just look at the economic data, which has been slightly more favorable, but Americans and really citizens in the world need to feel more comfortable, need to feel like they're actually doing better to change their behaviors. And so now I think there's some optimism as we've seen markets and also in consumer finance where people are just spending, and hopefully that spend will pivot and transition into our crypto markets, and more retail investors can participate in what we're hoping could be a good outcome for 25.
Yeah, look, 25, I think things are lining up to be really exciting. Literally, the only business that I'm aware of, when things go on sale, people run out of the store. And we just saw on Black Friday, you cut the price of stuff, people will run into the store and they will run over each other, like literally trample each other to buy the latest, PS5 game. But man, you put digital assets on sale or stock assets on sale, people run out of the store. And so the trepidatious few, and it's usually the most disciplined. It's funny. There's this buddy of mine. We're friendly. We're not close friends, but we're friendly. And we met each other through the oil business. He's down in Texas. And Jim, if you're watching, you know who I'm talking about. And, he partnered up with this very famous wildcatter who was early to the Permian Basin, and they made a ton of money selling out to one of the big oil companies. And, I went down and I'm not the only one, but I went down there in 2017 and when we were getting started and said, hey, you guys should look at this, crypto stuff, Bitcoin stuff. And, the other guy was like, yeah, whatever, I'm gonna go back to oil. So he stayed in oil, but Jim, he bit and he was doing a tweet the other day about how, he was originally skeptical. And I said, of course, everyone I know and respect, everyone that I know and respect in the business started skeptical, not just about Bitcoin or crypto, about every good investment, about the internet, about the mobile net, about smartphones. It's like, what do we need a smartphone for? The flip phone's fine. But you start skeptical. But if you start skeptical and stay skeptical because you never do work, that's wrong. It's like being wrong is forgivable. People are wrong all the time. Staying wrong is not. Like trade. If you make a mistake and you put on a bad trade, that's fine. Just cut your losses. But the people who are inexcusable are the ones that just let it ride and say, oh, I'm going to be right. No, you're not going to be right. You're going to be poor. So skepticism leads to work. Work leads to knowledge. Knowledge leads to understanding. Understanding leads to conviction. Conviction leads to discipline. Discipline. And so it's one thing to have conviction. I mean, I pride myself on once I have done the work on any investment, I have strong conviction. In fact, my wife says, you have too much conviction. You're so forceful. Like, what if you're wrong? I'm like, change my mind. But what's harder than conviction is discipline, right? It's like, this clip got reposted again. I love when people do this. I love when people find something from like 4 or 5, 6 years ago and they repost it. It's like going down memory lane. And there was the clip. I was on CNBC with Melissa, and literally while I'm on the show, it's only 6 minutes. The price fell, I don't know, 10, 15% down to $8,000. And she said, oh my gosh, what should we do? And the look on her face was just awesome. And she, well, you would always say that. You don't care what the price is. I'm like, you're right. So yeah, it was 107, 108, and now it's 96. And just keep thinking of it as savings, right? Do you put money in your savings account every day? No. You put savings in your account on some periodic basis. Do you take it all out at once? No. You take it out when you need it.
Right.
So don't put the money in you need to live. Right? That's your liquidity bucket. That needs to be safe and in cash and spendable. And it's not the get rich stuff, right? This is not speculative meme coins. I mean, I love the fact that serious people from my old world, right? The Morgan Creek Capital world are posting, like they used to post the list of best assets, stocks, bonds, gold, currencies. Now, and then they grudgingly added Bitcoin and Ethereum.
Sure.
Well, now, if you look at Charlie Bilello's recent list this morning, Fartcoin, number 1.
Oh, my God.
Right?
Oh, my God.
And he's doing it as a joke, and he's doing it to say, you guys are so stupid. But that $1 billion didn't exist. Now it does. And look, I'm not a meme coin aficionado, and I don't really understand the monetizing attention thing that people talk about, but I get the numbers. And is it likely it's going to have a Hawk Tuah moment, right? Where Hawk Tuah was whatever it was, 500 million, and then it was zero. Sure. Should Fartcoin exist? Probably not. Should Dogecoin exist? Maybe. Elon's a pretty smart guy. He, in theory, and I'm not sure he had the plan originally. I think he just realized, if I do an ICO and I put it on my website, people are going to buy it because people love it.
Sure.
So, okay, I should have done. Yeah, we all should have done that. I mean, not that we have the same following he does, but anyone should have done that. But now because Dogecoin doesn't have any developers. It doesn't have any use cases. It's literally just there. But if suddenly you could buy a Tesla with it, or you could pay your taxes with it, or they use it as a payment system for government transfers cross-border,
right.
And that could happen. I'm not saying it should happen. I would much rather use USDC, but if they do that, then suddenly it has utility. Now, is Fartcoin going to get that? No.
Probably not.
Is some other meme coin, Shiba Inu, going to get that? No. But Doge could, maybe.
So we've got probably three stories to wrap up with two quick ones and probably one of a longer term. I like to also think of the year mark in terms of sport events. So if we had Michigan and Connecticut at the top of the year, we had South Carolina women and the Caitlin Clark story. They were able to hold on and have the perfect undefeated season. Then we get the Celtics in the summertime. They come back to greatness. Tatum finally wins the title, one-year nemesis at Duke. And then now we're kind of getting into that fall-winter area, where the Dodgers beat the Yankees. The Bible is the bestseller, which kind of either is a very hopeful thing or a very pessimistic thing. But you're also seeing companies.
Apocalypse, right?
Exactly. Then you see Grok have one of the most successful rounds ever at 640 million. This was the AI story that now the market is big enough for not just AI in decisioning and AI growth in terms of two very specific areas. One is the training element. That's the NVIDIA side. But what Grok really focuses in on is that inference, that decisioning, where you need this really powerful set of machines where they have dominated the market. Then you start seeing some interesting things with acquisitions, right? So you start seeing, you mentioned on stablecoin, Bridge gets acquired in what was the largest crypto acquisition of all time for 1.1 billion by Stripe. And then the last story, which you touched on last week, and we had a really great discussion, and part of the most fun part of our job, Mark, that we say is just the amount of learning that we're able to be around. Remember this morning, the conversation we had with Dave Archer, and he just breaks down what is a very difficult to understand idea of quantum mechanics. When you have a certified expert in the world of computing say, this is admittedly a very difficult conversation to have about quantum mechanics. It's going to be somewhat complicated, but he did a great job of explaining quantum computing on the verge of this Willa news from Google being, a potential boom. It had 200 billion mark in gain to Google that day on the announcement. And now we're kind of trying to figure out, are we going to get to a point where quantum can be commercialized in a venture fund of a 10-year venture fund? So can you start seeing some realizations in that, a fifth year, or a point where you can figure out what's going to happen to this asset? And now we're kind of left with this point, Mark, where a lot of the table has been laid out this year. Big gains in AI, big gains in crypto, some seedlings, even if it's just marketing on the quantum side. And now, 2025 with a new administration, or folks feeling a little bit more confident about where the direction is being headed. I'm feeling very grateful for having done our 76th episode with all the great listeners.
Unbelievable. But on this, I think the challenge is, how do you navigate a world where everything happens instantaneously, and unless you happen to be paying attention to that story at that minute,
right,
it couple of quick examples. So when OpenAI, made their big announcement about ChatGPT, there's this little company, which has a ticker, AI, who went up 4x instantaneously. Now, the company is actually called C3 AI. They have nothing to do with OpenAI. They have nothing to do with ChatGPT. They are a consulting business that tries to help companies integrate AI. Now, they've been doing that for years, very unsuccessfully. And their guy who founded it is kind of dicey and has some checkered past of security stuff, but whatever. But people don't care, right? They're like, I need to invest in AI. So that goes to the moon. So Google announces Willow and says, our chip did the benchmark in what would take a normal computer 10 septillion years.
The age of the universe. Yeah.
Okay. But, Dave, who is literally a rocket scientist and works for NASA and is one of the world's foremost authorities on computing. And he says, well, okay, but here's the thing. That benchmark was created to measure when a quantum computer could execute fast enough that a normal computer could no longer check their work.
Right.
So it has nothing to do with anything. No normal computer would ever try to, it's not a problem. It's not like a 2 + 2 = 4, 2 × 2 to the 24th power. What's the answer? That's not what this is. This is a rigged little game that the quantum scientists, because remember, this is not commercial. This is in the lab. And the other part I loved, he said, what you're trying to do is something that Einstein described as very difficult.
So you're telling me there's a chance.
Hey, they're telling me there's a chance. If you're the smartest man in the world, there's a chance. But he said, you got to isolate a single atom using lasers, and then you're capturing multiple states, quantum states. So it's not a 0 or a 1. It's 0 closing in on 1 and 1 closing in on 0 and in the middle all at the same time. Like literally makes my head hurt. But if you think about that, that would be something that's vibrating, right? Well, if you put two qubits together, those vibrations bump into each other and that causes interference.
Yep.
And what the Google guys did is they found a way to keep the qubits 105, not the millions, plural, that you would need to actually crack code or something, but the 105, which is more than anyone else had done. So I'm giving them credit, but to isolate those so that the error correction, right, that you run through the quantum machines to limit those sine waves canceling each other out would give you the ability to not get less bad outcomes the more qubits you added. He's like, that's good. But that's in the lab, in a perfect environment, not very stable, and they did it for a couple seconds.
Right.
Hey, that's better than we had the day before. Now, you asked him, how far away from mass commercialization? 1 decade, 2 decades? And he didn't really know. He says, I'm not gonna hypothesize because I love the comment. He's like, we're very clever monkeys. Us people in the research world, right? We're clever monkeys. So maybe I say 10 years and someone figures out how to do it in 5 or 7. But anyway, so his point was don't panic and keep asking good questions. But all this comes down to how much fun is it? How much fun is it to immerse ourselves in a world full of these incredibly smart people?
Amazing.
Literally trying to change the world. Have a chance that now 76 times in a row, not in a row, but 76 times over probably 80 weeks, and we'll miss next week because of the holiday, but to get to talk about it and to get to debate it and have dialogue and get feedback and look, this this is the greatest thing there is. Innovation, human creativity. And this is where I probably have a different view than a lot. AI is amazing. And some of the things that it can do are truly dazzling. And now, 75 years, overnight success story, but okay.
A great episode for those that are looking for some holiday listening.
But the thing that I just don't see computers being able to do, even though there was an announcement that I read this just before we came on, that there's a Chinese researcher that created one laser-based neuron. So basically the way, neuron works is it stimulates and then it sends a signal to the other neuron. Our brains have billions. So they did one in the lab, but that's a long way from billions. So my point there is that the randomness of how the brain works and how the brain can, while you and I are talking, part of the brain can be getting data from our experience. Part can be putting stuff together and making an inferential leap that might be new information. Maybe not. Maybe it's just repeating something what somebody else told us. But that randomness, one, is magic. It's just pure magic. And what it does is it allows the human mind to imagine the unimaginable and then harness the physical world, even to the point of single atoms, and try to make things better, faster, stronger. And we're all better off for it. And that's what we should celebrate. That's what we should be thankful for in this season of giving thanks. And so, I'll offer my thanks to all the listeners who hang with us every week. I wish you and your families all the best in however you celebrate, wherever you celebrate. And the time you spend with loved ones hopefully is good and safe and fun and exciting and gratifying.
Now, well said, Mark. In a perfect area to close. We didn't even have time to talk about Amazon's $8 billion investment through Anthropic and how they're trying to challenge NVIDIA. I think this is going to show that, the tech stories aren't over. It's really just beginning. And if we think about, one technology kind of being supreme for a while, it's really only to sort of give the next technology an opportunity to catch up. And so if you're talking about quantum, in the meantime, you've got all of these AI developments that are right there for mass commercialization or increased investment into the public sphere, which is hopefully going to all add a little bit more to our 401ks. That would be nice. If we look at
you said something very interesting that we're just at the beginning, right? I'll tell you how beginning we are. So yesterday, and I think I was a couple days behind, I saw the video of Jensen from NVIDIA announce the Jetson, be close to Jensen, but the Jetson Nano, right? Which is basically a Raspberry Pi, but a GPU instead of a CPU. $249. I did one search on ChatGPT. Where do I get it? Boom. I can get it at Amazon. One push click, and it's going to be under the tree for my 13-year-old to play with. And that's awesome because now I'm going to let his creativity and the Jetson, right? We're promised flying cars and we got $249 GPUs, but that is pretty amazing. And it can do 70 trillion calculations a second. 70 trillion calculations a second.
I mean, if that isn't on everybody's Christmas wish list, I don't know what should be, Mark. I think that is an astonishing number, and we'll remind our listeners, as always, to rate, review, subscribe. Thank you so much for tuning in. We will be back into the new year, recharged, ready to go, and as always, remind our listeners to stay current. Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.